Pastor, how you guys doing today? All right, so welcome to Can We Talk. As you know, we have a weekly show here. But remember, you don't have to wait for us to be on the television. You can go online, go on Facebook, go on Twitter, TikTok. Look at a catalog now. We have at least 50 episodes you can see, learn about finance, and not just that, other things in your life.
We've talked about many things in the last 3 or 4 years. Time goes by so fast.
Yes.
But a lot of these things that we talk about are to encourage you to, number one, look at your finances, put together a plan of action together, and we give you real-time information on a weekly basis as to what's happening out in the world. There's a lot of things going on right now with the finances, with the real estate, with budgeting. There's so many things going on, and you know, it's almost like some people have an hourly podcast.
Well, I was going to say, the good thing about our show is we summarize it for you, so you don't have to go look from different sources. We're constantly looking at the sources, seeing what data we can put together, and make it more digestible and easy for you to watch.
One of the things we wanted to talk to you about today, well, first of all, let us give us a formal introduction. I'm a broker with Tri-State Realty, and also my son is a broker with Tri-State Realty. And we have over, myself, 38 years of experience. My son's been involved how long now?
About 15 years.
Another 15 years, so that's 38, 40, over 50 years of experience that you have here. I've gone through many ups and downs in the financial arena throughout the course of the last 38 years, with the economy going up, the economy coming down. Real estate goes in cycles. I've seen the crash of 2008. I've seen the foreclosures. I've seen real estate bounce back. But you know, one thing about real estate is no matter what happened in the past, if you look at your portfolio now, it's way leaps and bounds ahead of what other investments are that are out there.
Exactly. What people see with real estate, although there are cycles, it goes up and down. A lot of commodities go up and down, but one thing they can't make any more of is land. So think about that. When you have real estate, you know you may be in a down cycle now, but just hold on, things could reverse very soon.
And things have reversed, because what has happened in the last, say, 3 or 4 years, ever since COVID, most of the people expected prices to go down, expected the real estate values to go down, but just the opposite has happened. Real estate has soared through the roof. The people that purchased, they are looking right now at a lot of equity in their property, which is one of the things we're going to talk about today is what you can do with all of that equity that you have built up within your property.
Yes, I was going to mention that also. People that are holding on to their houses saying, I'm not going to sell, I'm not going to sell. Remember, if you wait, let's say, into next year or even into 2025, what you're going to realize is you kind of missed the boat to sell your house for the highest that you can get, because the more inventory on the market, the less that you can sell your house for. There can be more choices for people to choose from.
And one of the things that you may consider is you look at, what are my options? What is the advantage? I recently sent out a newsletter saying, what are the benefits of selling a property? And there's many benefits in selling a property. First of all, you have to have a plan. In other words, just to sell a property, and many people say, well, if I sell a property, then where am I going to go?
That's the key thing. You say, people, where do you go when you sell this house? Do you become a renter again? Do you try to buy a house at these new prices you may not be used to? So you make sure before you even begin to even sell your house, you have a plan written down and you want to execute it.
Most of the conversation today is going to be geared to those individuals where it makes sense to sell the house, where it makes sense from a financial point of view, personal point of view, and also from a point of view as timing. Everything is timing.
Yes.
So the timing may be right for many people out there right now. Remember, by waiting and letting things drop down to the bottom, that's not the right timing. And then you may be forced to sell. There may be a situation, there may be a life-changing situation where I have to sell my property.
One thing, not to interrupt you, but one thing I see with people who have been in their house, let's say 20, 30 plus years, but they're going to realize, even though that mortgage is paid off, if you didn't refinance, remember your property taxes are still going to be going up, your insurance. Maybe the kids are grown up, college, moved out, maybe they have kids of their own, you're a grandparent. Maybe it's time to sell that house and downsize into something, maybe a condo or a co-op.
That's a good point, because what happens is that in many cases, let's say for example, the taxes rarely go down.
If ever.
If ever, what do they say? There's two things you're sure of: death and taxes.
And taxes, definitely.
So taxes constantly go higher, and then the insurance cost. Insurance is another factor here. We haven't really talked that much about the insurance, but the insurance cost has skyrocketed to insure a house. And there's many reasons why. What has happened, we touched on it a little bit in the last episode, why homeowners insurance has gone through the roof.
Yeah, very
doubled
high.
In Florida, it's tripled, quadrupled.
Well, in Florida, special situations, we're not just limited to Connecticut. We look at different states. So, if you're moving from another state, we can give you a referral to an agent down there. But in Florida, for example, there's some areas that are just being hit so many times by these tropical storms, these hurricanes. Insurance companies aren't going to take the risk at all. They're going to actually cancel the policy or not even insure you to begin with.
Right. And, one of the podcasts that I watched last week, and the gentleman started off by saying, well, if everybody's blaming it on the insurance companies, greedy insurance companies making all this money. And he said, well, if that was the case, then why are the insurance companies pulling out of Florida? Why are you having, and I'm not going to name the names, but how these insurance companies are saying, we've had it, we can't make any, we're losing money in Florida. Yes. So we're leaving. Even at the high rates that they're charging, they're still losing money. And that's because the high cost of labor, the high cost of materials, all of the lawsuits that people incur, the slips and falls and this. And
one thing I saw also, I was watching something about Florida. What they're doing is they're actually encouraging people to cancel the policies or find a way to drop them. For example, they'll send a drone out to the whole neighborhood and look at everyone's roof. And they'll say, well, if you don't fix your roof, we're not going to continue to insure you. Or if you don't fix this, fix that. So they're trying to get as many people off their books, because if all those people file a claim on the next hurricane, it could bankrupt that insurance company.
So there's a lot of changes, a lot of things that are going on. But flying across the East Coast, and now we're back in Connecticut.
Yep.
We have the same things happening here.
Same things happening here. We have the flood insurance issues with our own, property insurance. Things are going up. Many
areas that have had low rates in the past now are realizing that they have to purchase flood insurance. The flood insurance areas are dictated by the FEMA. And what they do is they take a map and they draw lines on that map as to the probabilities of a 100-year flood, a 500-year flood, a 1,000-year flood, and if there's a possibility of it flooding within that 100-year period, then the rates are different.
Isn't that something? You can be no water near you. You don't see no rivers, no lakes or anything like that. But you gotta remember, especially here in Fairfield County, there's a lot of water underneath the ground, and you may see that when you see some of these houses that don't have basements because they couldn't dig. If they keep digging, they'll hit water. So those houses would need flood insurance.
And people don't realize that if you dig down deep enough, you're going to hit water.
Oh yeah.
And I remember as a small child living when I can't say I grew up in North Carolina, but I left there when I was like 5 years old. But I always used to be amazed to go out in the backyard and someone would put in a pump, and they get these long pipes and they just drill them down into the ground further and further and further, and wondering what the heck is going on here. And then all of a sudden they hit a certain spot and the water comes flying up just like hitting oil.
Yeah, right.
And then they put a cap on it and you pump the pump, and that's how you got your water. So the further down you go, the more you hit the water, because the water is flowing underneath the ground.
Exactly.
So a lot of times people, when they buy a house, they don't realize that even though there's not a lake nearby or a river nearby, you may need flood insurance because there's that water that's running underneath the ground. Here in this area, like Stratford. In Stratford's
definitely an area.
What do they
Surf
call
Avenue.
All those areas, they have, what do you call them? And you go underneath, under the basement.
Oh yeah.
You don't have a basement. You have a crawl space.
You have a crawl space.
Crawl space. The space is just big enough for you to crawl under.
Exactly. he can't dig that deep. And then, but you'll see with a lot of those houses, they have a big, say, shed in the back or some type of alternative storage because there is no basement with the house. And one key factor, if you walk into a house and the water heater is in the kitchen, then definitely you know there's no basement.
And the furnace is in the kitchen.
And the furnace is in the kitchen
the closet.
also. Yeah, how about that? So definitely, that's just some tips if you're looking for houses in Stratford area or anything like that. Things in the kitchen means there's no basement.
What we're saying is that basically you may have all of your family living in the house. Now, what are the reasons for moving? Now the families, let's say the children, you had a 3 or 4 bedroom house, big house. Now all of a sudden the children have gone. They're not coming back home because they went to school. Now they relocated in DC or maybe in Texas or wherever it may be. So you're paying all of these high taxes on this big house. You're heating this big house. And the insurance on this big house. So when you're at the end, and you may be retired or you may be on a set income. And so you look and you're saying, okay, I've got $3,000 a month coming in, and I've got $3,200 of bills.
You're in a deficit there because this house, you gotta realize the house is gonna keep going up in value. Remember in some of our previous episodes where we're talking about how the house makes more money than you. You can work all year, but look at that equity. The equity is going up and piling and compiling, and you're like, wow, my house made more money than me this year.
And a lot of people, when they retire, they just want to take it easy. They don't want to continually work and work and work and work. And put it in brick and mortar and just the house. So at a situation like that, it may be feasible for a person to sell their house.
Now, what I was going to say right now, this is the time to act because thinking about it, right now, as you've seen in the past few episodes, we're talking about there's no inventory. We have very, very low inventory. So if you've been in your house, let's say, since 1991, 1992, you want to sell it, you have an advantage because you can sell that house as is versus, I'll say in a normal market, you would have to do some repairs, maybe put some stainless steel appliances in to get the top dollar. But right now, you get pretty close to top dollar at selling your house as is.
You just mentioned something. A lot of people make the mistake of saying, and this may pertain to some of the people out there, we'll give you a couple of tips. A lot of people will go and spend a lot of money, and they always say, well, I'm not ready yet, I want to fix it up. I want to fix my house up.
They fix the wrong things.
They fix the wrong things.
The driveway with the one crack in it, I'm going to have it repaved before I sell it.
Somebody comes by and gives you a price. Oh, you see your driveway there? We can do the whole new driveway. And so you're thinking, oh, wow. I get a new driveway, I can get a lot more money. No, it doesn't work like that.
Nope.
And you know what? A lot of it's ego. You might be saying, I always wanted to get that driveway done.
How about that? Not to stop you, but we encounter a lot of people. You've been in the house for 20 years, now you decide to fix these problems that have been a nuisance the whole time, whether it's the driveway, that door in the back that squeaks, now you decide to fix it when you're about to move out.
Exactly, and we laugh because we see this happen all the time. Once a person decides they want to sell the house and they start looking around, they come up with things that they didn't fix, number one, from 20 years from the first day they moved in. Just I've been wanting them, they may have one shingle off the roof and they say, oh, I'm going to put a new roof up there. Bad idea.
Don't do that.
Very bad idea. Because look at it this way. Here's the money doesn't work. Let's say the new roof is going to cost you $20,000. So now you go, first of all, anyone buying the house expects it to have a roof.
True.
So now let's say the roof is old and you're selling the house as is. You know it needs a new roof. The buyers have it inspected and they say, okay, it needs a new roof. You're selling the house for $300,000. So now here comes the buyers, and the buyers say, hey, you need a new roof, so therefore we're going to take $5,000 off of our offer. So, and think of this, what's better to have an offer for $295,000 because the buyer took $5,000 off, or for you to spend $20,000, put a new roof up there, and now you're not going to go and sell it for a lot more money because the buyer expected it to have a roof in the first place.
This is going to happen because we know from experience. When you put that $20,000 into that new roof, guess what? Now you're going to want to add that to the listing price, and then that's going to leave your house on the market longer than it needs to be. When you take our recommendation, you're going to say, well, I want to get my money back for the roof. Well, you should have left the roof as is.
Right. It's better to have let the buyer take $5,000 off for you than for you to put $20,000 on there. You're better to sell it as is. Besides, on top of that, what you spent for the cost of the roof, the buyer might have a friend that does roofing and can do it for a lot less money. So they're not going to hit you as hard as you have to go out and pay that contractor. So it's better to leave the roof as it is.
Yeah, leave the roof as is.
When the bank sends the appraiser out to look at the house, the general rule is that the roof has to have at least 2 years of life left.
Yes.
In other words, it must be able to go at least 2 more years without starting to leak.
Yep.
So if you look up at it, if it looks okay to you, it's going to be okay for the appraiser and for the bank. So that's the biggest expense that you could make and not get that money back.
Exactly.
You know, it's like trading in a used car and putting a new motor in it before you trade it in.
Yeah, exactly. That's a very good analogy. People want to put their house on the market and start fixing the wrong things, you know? If anything, your attention should be placed towards what people are going to be looking for. If you're going to spend $20,000 on a roof, I would say if you're going to put that much money in the house, you can add an extra bathroom legally for permit and everything. That'll add a lot more value than the roof, I'll tell you that.
Sure will. A whole lot more value.
Exactly.
Maybe you want to go in there and go to the Home Depot or wherever it is and get 25 gallons of paint and paint the interior.
Paint the interior.
Make it look good. You know, if the driveway looks bad and you want to fix it up a little, go get the tar. Sealer. You
You
know,
don't have to have it paved, just make it look like a new shine on it.
Get yourself five 5-gallon cans of sealer, smooth it all out there and let it dry. Boom, there you go. Make it look. There's some things that you can do without spending a whole lot of money and keep the extra money in your pocket. But we see so many people go out and spend a whole lot of money
on the wrong things.
On the wrong things that they're not going to get the money back. The house has a furnace. This is not the time for you to go converting from oil to gas.
Oh no.
This is the last thing in the world that you want to do. So all of these big expenditures that you want to spend your money on, you know, you don't do it. Here's the biggest disadvantage that I find.
What's that?
People will wait and wait and wait till they get these things done before they put the house on the market. And in the meantime, you're losing market share. All the other people around you are selling their homes while you're waiting to do this and waiting to do this and waiting to do this. Just do it. Put it on the market. Sell it as is.
And also, the numbers we're using pretty modest, $20,000 for the roof. What if it costs more than $20,000 to do your roof? What if it runs into complications? So it's better right now. You have an advantage. Put it on the market as is, and you can see what offers come out.
That's true. Put it on the market as is. Remember, you're in control.
Yes.
If you don't get what you want, no one says you have to sell the house. If you get an offer in, it's not good until you sign the paper.
People don't realize that. I would say when we put an offer or we put a house on the market, it's on Zillow, Redfin, all the apps, people can see it. People can make you offers either at asking price, below asking, above asking, but you have full control. You don't have to go with any offer you don't want to.
You can even counter the offer. Whatever that offer comes in, that you could say, no, I changed my mind, I want more money. You know, you could, and this is controversy, but you could put a house on the market for $300,000 and get an offer for $300,000, and then you could say, I want $310,000. And you say, well, can they do that? Hey, until they sign the paper, they can do whatever they want. It's their house. They can raise the price. They can say, oh, you know, after thinking about it, I want even more money now.
Exactly.
So there's the main thing we're getting at is that you have to take advantage of the opportunity. There's reasons why you may want to sell now versus waiting.
And I was going to say, another reason people may be facing foreclosure. Remember, it's different than 2008. I see a lot of people, they get these letters in the mail from the bank, and it terrifies them. They don't even open a letter. They might move out the house that night. Say, bank said we got to go.
Bad decision.
Not realizing, technically, your name is on the deed. You're the owner of the house. Remember, the bank holds the mortgage. So technically, that's your asset until the bank does foreclose. So you do have time and opportunity to cash in on that equity and then possibly have money left over.
Sometimes, like you just said the big key word, have money left over.
Exactly.
It's unfortunate what we see sometimes is there are people wait until it's too late. They get the house, and now the house is in foreclosure, and they don't do anything. In the meantime, while you're not doing anything, the bank is moving forward.
Yes.
They're filing a motion. The first letter you get is a letter saying that you're late. The next thing that you get is a letter saying that you have so many days to send the payment in. Then the next thing you know, here comes the sheriff with a summary process. They serve you a notice. Now, right now, when that happens, you have to go and file an answer. The first thing for you to do is not run and hide, not ignore it.
I was gonna say that's the number one thing.
Worst thing you can
go
do.
to court. Whether you're scared or not, just go to court. Remember, you not showing up is what the bank wants. At that point, you by default, you're saying
You lost.
You're lost. Very true.
Go to court, and believe it or not, most of the judges, I'd say almost all of them, are compassionate.
Yes.
They'll look at the property, especially if you got equity. What's equity? Equity means that if you sell the house, you have enough money to pay off the house and put money in your pocket. The judge is not going to go ahead and let the bank take the property if there's an opportunity for the house to be sold above what you owe the other people, because he's going to give you time. But you don't get that time if you don't show up.
That's key word, time. Remember, people who have these envelopes, these summons to court, you may think, oh, I only have 30 days to sell a house. Remember, when you go to court, you can mediate with the court, with the we call the judge, and ask for more time. And most time they'll give you more time, especially if you're working for a realtor. For example, we're specialized in foreclosure sales, where we can, convey to the judge, show them comparable sales, and say, hey, we need more time to sell this house the proper way.
And also, I want to put a disclaimer out there. We're not attorneys.
No, we are
We're
not.
not giving you legal advice.
Not at all.
We're just telling you what the general attitude is, what can happen, and what you should not do.
You should always consult with a legal professional.
Always get yourself a legal professional. Get yourself an attorney if you're being sued. If there's you get a legal notice in the mail. Do not ignore it. You can go to the court and at least make them aware that you received it and that you're going to be appearing in court, and go before the judge, or either hire yourself an attorney to represent you. It would be, money well spent, because if you do nothing, now the bank, like my son said, banks love that. Oh, he didn't show up. Great, he lost.
And think about it. Let's say you leave the first night you receive that letter, you ignore the house, you might drive by your house later that month and find it boarded up and say, what happened? The bank really took it back. No, remember, the bank has the right to protect their asset. They're going to put boarding up there, they're going to winterize it. But tell them what's something that's possible that you could do.
I had a client, and the client was in the process of abandoning the house. So he got the letter in the mail. This is many years ago. Got the letter in the mail, and they got nervous and they got scared, and they started moving the stuff out of the house. In the meantime, while half the stuff is out of the house, the bank comes by. The banks always send somebody out to check on the property to secure their property. They have in the deed it says or in the mortgage it says if you abandon the property, they have a right to go and lock it up and put locks and secure it. They have an interest in it. So they came to me and they said, oh, Mr. Scott, I says, well, where's the house? And they told me where the house was, nice area of town and everything. I said, well, you own the house. They said, well, the bank sent us the notice, so we left. I said, go back to the house. They said, well, the house has got a lock on the board. I said, who owns the house? They said, you do. I said, they're securing it because you left the house. You didn't abandon it, you left it. I said, all you got to do is go and take the locks off and move back into the house. They said, can we do that? I said, well, look at what's going to happen. If you go and take the locks off, if the police come, they're going to say, well, who owns the house? You can say, well, we do. You can't get arrested for breaking into your own house.
Very true.
There's a legal process that the bank has to go through before they can take over possession of the property, the foreclosure process. Now, if they haven't gone through that whole process, you still have a right to go back and secure your property. And so what happened is that they went back to the property, they moved into the property, and it was over, I think, a year and a half later when this made it all the way to the court.
How about that?
So when it made it all the way to the court, they ended up having an opportunity to sell the property. They ended up with something like $80,000 over and above what they owed the bank. So they had $80,000 after all expenses and everything in their pocket, $80,000. And then the daughter, who was a nurse, I remember, lived with them. And they used that money to give to the daughter to buy, because the daughter had good credit and everything, she didn't own a house. The daughter went out and bought a really nice house and moved the parents in with her.
How about that? And they wouldn't be able to do that unless they realize that they have rights to go to court. And, you know, I would say these foreclosures, don't let them scare you to death. They're possibly to be negotiated. And like I said, this time is different. A lot of these houses have a lot of equity that haven't been tapped into.
Now, there's another word that we haven't heard in a long time, and we're going to be talking about that probably in the next year or so, hopefully called short sales.
I already knew where he was going with that.
Short sales.
See, cycles. You see, we're going through the cycle. We've been through this before. 2008 was a little different. This time's a little bit different, but we're seeing clues and characteristics, and we know what to do.
And I'm also a short sales specialist.
Yes.
Going back about 4 or 5 years ago, there was a lot of short sales. What a short sale is where the house is worth a lot less than what you owe on it.
Yes.
So you might have bought a house for $300,000, and now because of the market crashing or whatever may have happened, it may be only worth $250,000 or $200,000. So you can't sell it because there's no equity in the property.
Exactly.
And if you do sell it, you got to come up with the difference to pay the bank so that they get all their money back. So there's such a thing called a short sale where the bank knows it's going to take a long time to
Keyword, you see
foreclose.
that? Short sale isn't technically a length of time. Saying it's a short sale is what it means, that someone's going to take a short on that mortgage. Someone's going to be basically owed money.
So the bank may give you time to sell the property, and even if there's money owed on the property, they will forgive that amount. They won't come after you for that amount. So now you can move out of the house. You don't owe them all of the money that you had owed them. And guess what? There's even a bonus. They will give you money to assist you in moving and give you money in your pocket. It's called cash for keys. So here you owe them money. They're giving you a time to sell the property, and they're saying, because you were so cooperative, here's another $10,000 for your troubles.
Now, some of you may be saying that you guys aren't telling the truth. That bank doesn't give money out for free.
Google it.
Google it. I've seen it happen before in the last recession we had. These banks, think about it, they would rather pay you to get out versus you stay there and maybe damage the house, more wear and tear. The quicker you're out, the quicker they can put it back on the market, auction it off, and have an investor fix it up, the quicker it can get back into the cycle.
All of these things that we're telling you, I'd advise you to just go in and Google it, put it on the Google, look at the YouTube video.
Or look at our episodes. Go back. We got 50
episodes. Go back to our episodes, but I'm saying our episodes tell you, but you can even verify. We don't tell you anything that we have not verified or that we have not experienced. That's one thing about us. We've lived it, we've done it.
Very true.
And we're out in the field doing it every day. So hopefully today's episode helped you and give you some insight as to some of the things as to why you should sell the property, and maybe you have friends out there, but look at some of our episodes, look at the past.
And if you have any questions, give us a call. You know, I said we're not legal advice, but we have a lot of experience. We can answer a few questions and put you in the right direction.
Call that number down at the bottom of the screen, and we will surely help you. So until next week, God bless.
Amen.